It is time to talk about your money here on Good Morning Quad Cities. But first, let's get a look at the stock market. Last week, the stock market closed Friday lower than when it opened on Monday. But there is some good news this morning. The S&P 500, NASDAQ, and Dow Jones all expected to open in a better direction this morning. And on Friday, the Labor Department released its latest monthly employment report, which is used as a main indicator for the health of the U.S. labor market. In May, the economy added 390,000 jobs, while the national unemployment rate remained unchanged at 3.6%. So joining us to break it all down is our financial expert, Mark Ravichevsky. Thank you so much for joining us this morning, bright and early on a Monday morning.
Bright and early on a Monday morning. Good to see you as well.
Yeah, good to see you. Yeah, I usually only see you over Zoom, so this is nice to be in person.
It's great to be back in the studio.
Absolutely. So let's start off with, what are your overall thoughts on Friday's employment report?
Well, the labor market, look, it's far from perfect, but it is one of those parts of the U.S. economy I would consider, relatively strong. In May, the economy added 390,000 new jobs, above the 325,000 that Wall Street had forecast. For the third month in a row, David, the national unemployment rate, did hold firm at 3.6%. But with inflation at a 40-year high, and now we're starting to see these rising interest rates, many companies are starting to raise those alarm bells over higher costs, whether it's labor costs, operating and manufacturing costs, transportation costs. And the concern is that these companies at some point start, pulling back on their labor costs to help keep these high costs under control.
Yeah, and just this past week, the White House had released when they were talking about the unemployment, they talked about the number of jobs that were released, saying that there's 2 jobs available for every 1 person looking for a job right now. So in your opinion, what are some of the biggest challenges the labor market is facing right now?
Well, you just kind of hit the nail on the head with that, didn't you? One of the biggest challenges facing the labor market is getting people to return to the labor force from this pandemic. If you remember, back in March and in April of 2020, the labor market lost 22 million jobs as entire sections of the U.S. economy were literally shut down. Yeah. But here we are, David, over 2 years later, and we've yet to recapture 822,000 of those lost jobs. There's currently a near record high, 11.4 million unfilled job openings across the nation. David, this is 60% higher than what it was before the pandemic. Wow. Now let's take a look at this labor participation rate, which shows the percentage of Americans that are either working or actively looking for work. The labor participation rate in this nation, David, is at a 45-year low. And this number here means that we have millions of Americans that were once working, are no longer working, and more importantly, are no longer looking for work.
Wow, that's a pretty staggering number. And so what is the outlook? What is the labor market look for the rest of the year, in your opinion?
In my opinion, for the rest of the year, the labor market should remain fairly strong. For me, the bigger concern, though, is once we get to 2023. This very potent combination of high inflation, rising interest rates, at some point will start to act as a weight on the U.S. economy. And the big unknown question is, to what extent will that weight on the economy then be transferred over onto the U.S. labor market? And that's something that Wall Street will be keeping a very close eye on over the next 6-7 months throughout the rest of the year.
And I do want to ask just one additional question too. Being that there's been so many ebbs and flows on the stock market, when should people start speaking with their financial advisor about maybe moving some monies around?
Any time to speak with your financial advisor is a good time. This market, the reason we're seeing all of this sell-off is that concern and apprehension over high inflation and rising interest rates. And until we kind of get some answers on what is the impact of that going to be on the U.S. economy, expect the stock market to remain choppy.
All right, Mark, thank you so much for joining us this morning with your excellent expertise.